you need to file all your returns, what you have. You have your income tax return, you have a GST returns, your POI, your FBT returns, and all the returns that you have. You need to file it on time, and you need to pay on time. From Labour government to government still now, nobody's been wanting to remove the GST. Everybody's talking about GST. And they're not now talking about GST, but they're talking about capital gains tax.
As an employed person, what are my do's and don'ts when it comes to tax? Or it's all taken care by my employer. They pay me a net salary, I do my expenses from them, I don't care.
You're the end user, you're paying the GST to the maybe supermarket, wherever you buy any grocery item. That supermarket is collecting the GST from you when you buy an item, and then they are reporting to their system into the department. If your income is going to be over 60,000 in threshold, so basically you need to register for GST, and when you register for GST, you have to charge GST on the invoice or the hourly rate, whatever you're charging on, and then ask the GST be paid to you. Then you have to file your GST return depending on the cycle you have.
A lot of times we get questioned about accounts. What should we do? How can we save tax? How can we get better at paying tax? How can we keep our records on track? How can we pay our bills on time? What are the repercussions? What are the implications? What do you mean by self-employed? What do you mean by employed? What do you mean by the new tax rules on investment properties? What are the tax brackets? Well, we get inundated with these questions. And with that, we've tried to answer them in our best ability as mortgage advisors. But sometimes it's still not the best. But there are people who are the pundits or the rulers of New Zealand accounting generation. People who have been here even before I was even born in this world. People who got experience beyond even understanding of a normal man or a common man. Well, today my guest is someone who's been 44 years as a practicing accountant. Someone who's really given all his life to accounting and helping a lot of people to making sure that they meet the requirements of taxes in New Zealand, and also help them and guide them to put the right structures in place so that they can really be accountable to themselves first before they're accountable to anyone else in terms of their accounts, in terms of their professionalism. So today I would like to welcome none other than the CEO, the director, the main person behind Global Tax Accountants, people who are chartered accountants and who have really helped a lot of Kiwis to get across the line and set up successful businesses throughout these years. I would like to welcome Mr. Dinesh Raniga, our guest today. Uncle, a very warm welcome to you, and thank you for accepting the invitation to come on our podcast at Fundmaster. It has been difficult to get you. I know you're a very busy man, but it's really a pleasure. And sometimes, somebody like you sitting in front of me, I feel that what should I ask? Because, it's like, in Hindi we say somebody small trying to show light to someone bigger. So it'll be good to, get all the light from you for all the customers who can really understand that, a lot of questions which I'll ask you. But thank you, Uncle. Thank you so much for joining the show.
It is a pleasure. This is the first podcast in my life that I'm doing. And so I've been running away from it. So it's now you got me. So I hope that we can do justice to what we want to achieve today.
Uncle, that's very good. It's your first podcast and really gives me a lot of pleasure and, a lot of pride that I get the opportunity to speak to you and interview and, get a lot of questions answered, which I have and a lot of customers have asked me over the years. But Uncle, 44 years as an accountant, people say, if they look at mathematics or problems, they sleep. Most of the people are scared of maths. Most of the people are scared of systems. Everybody wants to do a business. 44 years and going on as fresh as ever. If you didn't have grey hair, I would have said, Uncle, you're like 25, right? But, grey hair basically masks your real age.
Past my age and my experience, visit. Yeah.
But I've seen you in, being a very passionate community man, helping a lot of communities, being on the boards, a lot of, places, having your own events company, getting a lot of talent in New Zealand. I think the latest was the hit Antakshari and getting all those big shows. So you are a man who wears a lot of caps, a lot of hats. How do you cope with everything? And my base question is about accounting today. I'm not going to digress. That being an accountant, what has been your journey so far? What keeps you going and motivated? And what has been your mantra for life, Uncle?
Well, the mantra has been predominantly helping people out in accounting. People come with no plan whatsoever in accounting and they want to go places. And we have been very lucky in that regard in terms of helping our clients grow and grow big. And sometimes if you want to hold them back, you can hold them back. We don't, because they have a vision and we want to align ourselves with their vision and making sure we have a roadmap we can get them there. And the satisfaction of putting your client first and making sure they are compliant in every sense of the word with the department, with the Inland Revenue Department, and making sure that we get them over the line in terms of where they want to go. That's our main objective, is basically with your growth is our growth. And we'd like to work with our clients hand in gloves.
Yes, Uncle, it's a very basic thing, and Uncle, you really boiled it down. People try to complicate things by saying, nice different lines and different new words. So, but you basically put in, for any business, especially accounting business or in a service business, it's always, if we keep our customers at the pedestal or the forefront, or we look after them first, the mantra is the only mantra a customer wants to hear. It's customer first policy.
And the other thing is being available to your client. So basically, if you have a phone call in a day, you may not have been able to respond to the phone call because you had a busy day. But at the end of the day, I make sure that I return all my calls. So this is very important, because your client is reaching you out and they want some sort of an advice or some sort of a conversation with you. You should be able to be accessible to him. So that's very important, to talk to your client at the time that they want to talk to you. It's very important.
Okay, that's a very good mantra, Uncle, for young businesses. And sometimes I've also been, I'm still learning, and I'll always keep learning. But yes, this is one of the biggest rules for any business, because what happens is, from a smaller business you become bigger because of those people, and then from bigger you become biggest, and because of those people again. But then sometimes you start, losing your priorities. And today, your 44 years of experience, was there any times that you felt that there was some lack, or there's something where you felt that, okay, I'm not able to, or you've just been constantly doing it day in, day out and going back to people?
I think when you have good people around you, it makes your life a lot easier. I have not had, sometimes, you get a person who is into your enterprise, and that person is always bringing you down because they cannot see the wood from the trees, and they are saying, no, it can't happen. And you have a vision by saying that, yes, no, it can happen. You have to just, if you don't try, you won't get there, right? So that is one mantra I have. It's like, you can't do it. No, we can do it. We can do it, but you must have a roadmap as to what are the pitfalls, what are the strengths, what are the weaknesses. You drive that and make sure you are able to get to the weaknesses and say, how can we remedy these weaknesses with our strengths?
That's amazing, Uncle. It's a very strong solution-driven approach. At Global Tax Accountants, I know personally that you and your team are very solutions-driven. And yes, we can is also telling, no means, sometimes people take no as a no. I call it next opportunity, right? And that's exactly what you said, is that yes, we can. And it's always not a no now, it's next opportunity, create a pathway.
Yes.
So, and that's what I've heard from a lot of people before, I came to you. We go and do our research as well. We speak to a lot of people. Everybody who knows you and has worked with you have only told me one thing, that if someone can really find a solution in this accounting world, is Dinesh Raniga and his team, because they really get in the roots to find the problem, figure it out, and make your case, or make you responsible and towards inland revenue, and also as a responsible citizen to New Zealand as well.
See, with regards to inland revenue, it's very important to be compliant. Whereas the compliant means that you need to file all your returns, what you have. You have your income tax return, you have a GST returns, you have POI, your FBT returns, and all the returns that you have, you need to file it on time, and you need to pay on time. There are things that these are compliance work, which we really make sure that we hold our hands for the clients, and we make sure we get them done on time. It's very important. Once you are on the timeline and you're doing things on timely basis, then everything else will fall in place. If you're falling behind, lagging behind in doing your basics right, then your business is going to fall. So you need to get your basics right and get yourself compliant and doing all the things with the department in a way that they want you to do. There may be times that you are unable to pay that debt. Then you again have to negotiate with the department. So there are a few ways of doing things, and we are able to do that with the department, and we're able to help the client. So basically, like you say, it's sort of compliance, very important.
Perfect. That's Uncle great, because I believe that there's a lot of work. People sometimes forget that an expert around you is always going to save you money in the long run.
Yes.
What happens is that I've seen in the immigration world, in accounting world, in our world, that rather than going to an expert, we try to cut corners to save that $200 or $300.
Yes.
Right? But we forget that 200 when it becomes 20,000
Very easily.
or 200,000, then you need someone like Dinesh Raniga to come and rescue them.
Yeah.
And you still don't say no to them. You say, okay, I will give you a pathway and find a solution for you.
Yeah.
And that's the most important thing in service industry, that you are there to help them.
Very important, because your clients are your customers, and your business is driven through your clients. If you look after them as if you're looking after your own business, that's one thing that I do, is I sit into their business and say that, what if it's from my business?
Yes.
And I say, okay, this is my business, this is how I would like to operate. And again, when you put yourself in their picture,
Yes.
and be where they want to go, you say, okay, you can do it, but not now, because you haven't got the cash flow, or you haven't got the funds to do what you want to do. You can do it provided you do this, and this, and you maybe in 6 months, 8 months, 10 months, you should be able to do it.
Okay.
And so that's a roadmap. Working with the client is very important.
Perfect. And that's basically, the mantra you've given is just a rehash for everybody in service industry. They're putting your client first, putting yourselves in their shoes, and understanding their need to provide the right solution. And not saying no, but saying, okay, no, if you turn it upside down, it's also on, right? Only opportunity, no, your next opportunity. Or in other ways, it's also a switch which is turned out to be on. Okay, we are on with you, right? There's no. And I believe in the same mantra, Uncle, that if today somebody's saying no, you will get a yes tomorrow. You have to keep trying and find a different way to do it. And my next question, and I'll get into the, girth of things. 44 years. A lot of people have come in, I came in 20 years back, somebody would have come in 30 years back, some 50, some 5 years, some would have come in 6 months back. If I have to ask you a brief snapshot on the New Zealand tax system from 1977, when you started your accounting studies, till now, almost 2025, what has been the biggest change so far in the accounting system or the tax system, the IRD system? Has it really changed, or are we really on the same lines?
No, way back in 1984, when the Rogernomics came into play, and where Rogernomics was not allowed to go through the process because of the change in personnel, but the GST was the thing that was introduced at the time. And that tax is actually raking in more money into this government coffers than it has ever been. And they have started with 12.5% GST, then to 15% GST.
Okay.
So I believe that the tax take in New Zealand is through the GST system. And that was the major change that came into play that got this government, or the governments from Labour government to governments till now, nobody's been wanting to remove the GST. Everybody's talking about GST. And they're not now talking about GST, but they're talking about capital gains tax. So basically, the change had been in 1984 when the Rogernomics, or the Roger Douglas government came into power. They introduced GST. That was the biggest change that happened.
So 1984, GST came in. What was the starting point? Today, I think we have 15%, right? When what percentage?
12.5%.
12.5.
Yeah.
And I think this was only 15% when John Key came in, isn't it? 2008, government changed to 15%. So it was from 1984 to 2008 was 12.5. And that had a massive impact. And obviously, India has also been through a change of GST a few years back. So, was GST a good introduction to New Zealand tax system?
Oh yes, definitely. It's all the other taxes. There used to be licensing and other bits and pieces. There used to be other duties that were being charged on this. Everything was abolished. It became one tax and one system, and that was fantastic.
Was it helpful for customers?
People were reluctant in the beginning, but I think people now have adopted to it. Since then, it's been sort of like, now it's basically, now the government, we can monitor. Only thing they can do is monitor the rates on the GST from 15 to 20 would be a very good idea, I think. But some other story.
We'll go to that story as well.
Yeah.
So, in terms of tax systems, let's go to 1984. What are the tax brackets today, and what were they then?
Oh, I cannot off the top of my head. Today, they're like, if you earn more than $180,000, you pay 39 cents in the dollar at the top rate. Okay. And that's basically, I'm talking about top rate. So anything above is taxed at 39 cents in the dollar. So everything else is scaled, and there's a scale. So don't keep it in my mind, but there is scale.
I understand.
Yes.
So I understand the scaling, but I think people know it as well. And there's a scale which goes through in terms of your PAYEs and stuff.
That's right.
I'm just going on very basic. What does GST stand for?
Goods and Services Tax.
What is PAYE, uncle?
Pay as you earn. That means like as you earning, you're paying the tax on it, and that's normally with regard to waged employee or salaried employee that pays that.
Uncle, what are the differences of, people talk about IR3, IR4, IR10, IR11. There are too many IRs. What are these different IRs in terms of business and personal?
Okay, so IR3 is your personal tax return. Predominantly, if you're self-employed, you probably fill in an IR3. Yeah. Now, if you're a salaried person, you're a salaried employee, the IRD has an auto pilot in terms of they give you your PAYE you pay, and then they send you at the end of the year, they send you a calculate, and you either accept or decline it. And if you accept, it processes automatically, and you just either refund or payment to be done. And the IR4 is your company tax return.
Okay.
And IR7 is your partnership or your LTC, look-through company tax return.
What about IR10, uncle?
IR10 is additional information on the tax return.
Perfect. Because, why I'm going to ask you layman questions, because they're my questions as well. But we are also tackling an audience from a new immigrant to someone who's needing a refresher course on accounting. Okay. Someone who really needs to know, right? And we forget. Yeah. We use these terms IR3, IR4, but I'm pretty sure a lot of people would really get a refresher on this. Yes. So basically, my next question is that, we'll first take will be on a new immigrant. When a new immigrant comes into New Zealand, what is the first thing they need to do in terms of their tax system?
So they need to apply for an IRD number. So basically, that's your first point. And for that, you need your ID, and you need what you call your address.
Proof of address, yeah.
Yeah. So basically, you can go online, or you can do the department's office, but predominantly online. Or you come and see an accounting firm, any accounting firm. We should be able to help you, and we as at Global Tax are able to help our clients get into the system and get their ID numbers, and that's very easily got.
Perfect. All good. And when they take an IRD number, so they're enrolled in the system, it's called an enrollment process.
That's right.
You enroll into the system, you have an IRD number. So basically, whatever you do, wherever you work, you give your IRD number.
Yes.
Okay, now I have come as an immigrant, or I'm already settled and I've got my IRD number. My next question comes for people who are employed.
Yes.
Right? If I'm employed and I'm working for someone, I pay as I go, pay as I earn, right?
Yes.
So PAYE.
Yeah.
So let's say I am at my employer is going to pay tax for me.
Yes. So what will happen is, when you first go and register with the company that you're going to be working with, you're given an IR330, which is a form that tells you to fill in all your details and what your major income is going to be from that particular entity. Then there will be a code M, which is basically your major income, and they will tax you. So whatever you earn in a week, they will deduct your PAYE. And if you're enrolled to be in KiwiSaver, you can be 2%, 3%, 4%, whatever. They will deduct that for you as well, and they'll contribute KiwiSaver. The company will contribute KiwiSaver, whatever your percentage is. and then they will file that return with the department, and they'll give you, the employee will get the net amount in the hand, and the employer is supposed to file that return with the department and pay the PAYE on your behalf, on the behalf of the employee.
So you get a pay slip which basically details everything. So Uncle, my thing is about, we mentioned about codes. Code M is major income. What are the other codes? I'm doing a second job.
The secondary income, it could be secondary. Yeah. It could be if you are not an overseas immigrant, you are local and you have got student loan, there are other different codes for it. So basically, as you are getting employed when you are coming out of your university, is you've got a student loan, then you will be paying your PAYE and a part of your student loan, depending, there is a working percentage that the department has, and you have to pay that.
And what's that code, Uncle? MS or?
I am not too sure.
Okay, but M code is major income, S code is secondary income. So if somebody is doing two jobs, let's say they work for Fund Master full time, and they work for, Westfield malls, one of the stores, let's say, whatever it is. So they'll be doing, if they're doing major 40 hours here, they'll do M for us, and they'll do 20 hours or 5 hours S for them, right? Is S means, are you taxed at a higher rate?
That's right. You had taxed at a higher rate because your first employment is giving you 40 hours in a day, and you're basically probably touching a threshold, and anything above that you'll be basically taxed at a higher rate.
What is the threshold? Is there a threshold that how much I can work for my main employer?
No.
60 hours, 100 hours, no problem. So it's just taxed at the same tax rate, but it'll be income based.
Income based and scale based.
The scale is 12.5, 20 and all that. Perfect. Now, as an employed person, what are my do's and don'ts when it comes to tax? Or it's all taken care by my employer, they pay me a net salary, I do my expenses from them, I don't care. Is that the way an employee should think like?
That is the way, and then basically looking at your pay slip as to making sure your pay slip is right. So that if you have done hours which are on a holiday, on a day that is a public holiday in New Zealand, then you are allowed a day in lieu, and time and half. So you need all that calculation done. And also you're entitled to, after you've been with the company for 6 months, that you're entitled for your annual holidays, and make sure those are being accrued on a regular basis on your pay slip. And you must be very, very vigilant in terms of what is on your pay slip as to the days that you're allowed in your annual leave and other bits and pieces.
Okay. So it's very, very important. So as an employed individual in New Zealand, as long as my employer is doing everything on time, I am covered, I am protected, and I can live my life, I can enjoy what I get in my account and do my expenses as I need.
Exactly.
Do I need to pay any taxes on my expenses or whatever? Do I claim GST as an employee person?
No.
No.
You don't.
So there's no GST for employed people?
No. Basically what you're doing is you are the person, you are the end user, you're paying the GST to the maybe supermarket, wherever you buy any grocery item. That supermarket is collecting the GST from you when you buy an item, and then they are reporting to their system into the department.
So the pro of being employed is that I'm not reliant, I'm not stressed on how to pay my tax, or it's 31st March, oh my God, my other terms which will cover is self-employed. So I'm like, okay. Is there any con of being employed?
No.
Just pros and pros.
Well,
right?
Basically, you have got no responsibility whatsoever in terms of filing your return. That is, if your income is going, like you say, if you have a secondary income, then yes, you will be able to, you have to file a tax return because your income is going to be higher. And maybe because the secondary income is taxed at a lower rate, and when you put all the income together, then you probably come at a higher rate.
Okay. And do we need an accountant if we are employed?
You don't really need an accountant if it is automatic assessment by the department. But then again, if you want more advice, because you're not going to be an employee all the time, you may want to grow somewhere, want to do something, you want to buy an investment property or something, you need an accountant for that.
Perfect.
We will guide you.
So Uncle, as an employee, if my employer is looked after me, I am taken care of, the whole onus is on the employer, and I can just live my life without any stresses of paying on 31st March and whatever. That's a very good pro. And if you want to really grow and you want to buy investment properties and stuff, then obviously we'll touch on later in the interview what you need to do. My next part is, automatically moving into self-employed people.
Right.
Self-employment. Now, I was working, let's say in ASB Bank, and I decided to be a mortgage advisor. Or let's say I was working for farmers and I now want to do my own business, right? From employed to self-employed, what is the transition? What changes then?
Changes are predominantly if you are becoming a self-employed person, you can do it in two ways. You can be self-employed as an individual. Then everything that you do is in your name. Or the other thing you can do is set up a company, and that becomes an entity, the limited liability company. That company will basically do the contract signing and everything else, and you being the employee of the company. And the company actually now builds everything that you are doing. And what you do here is then your liability is only limited to whatever you have signed for. And then you can use your company as your vehicle to do the work forward.
Okay, so as an individual, what I know from my limited knowledge is that as an individual, you're basically a sole trader.
Yes.
And you invoice on your name. Can you still do GST as a sole trader?
Yes, if your income is going to be over 60,000 in threshold, so basically you need to register for GST, and when you register for GST, you have to charge GST on the invoice or the hourly rate, whatever you're charging on, and then ask the GST to be paid to you. Then you have to file your GST return depending on the cycle you have, be it 6 monthly, 2 monthly, or monthly. Then you have to file the GST return.
Okay, and so basically, if my income is more than 60K, it doesn't matter if I'm a sole trader or a contractor contracting on my name, or I've got a limited liability company, I have to start working on GST in terms of whatever expenses I do through my account. Am I right in that? Okay. As a sole trader, why do people keep being a sole trader and they do not go to a company? Is it income related?
I don't know. They probably think that the management of a company is going to be slightly higher in terms of cost. It is higher because you need to do a lot of other returns and other bits and pieces, making sure you're compliant with the Companies Act and everything else that goes with the compliance for the company. As a sole trader, predominantly, if you're not doing many contracts and you just maybe a freelancer kind of thing, and you are basically, what you're doing is you're invoicing in your name, and you're receiving money in your name, and accounting basis is still the same, and you will be allowed deduction against expenses relating to your business. You must remember that whatever you do. So basically, say you are a IT genius and you're doing IT work for maybe, take for example ASB Bank, you're writing some software for the bank, and you are working individually and you're invoicing them. So your where you're going to travel to work and do there, or you're going to an office to do that work, or you're doing work from home. So all that, whatever expenses pertaining to doing that work is going to be deductible for tax purposes. That then you need to demonstrate where you're working from. Now, sometimes they said travel expenses, travel to and from work. No.
Yes.
Because it is like an employee. If you're traveling to and from, no, it's not deductible for tax purposes.
Okay.
No? So then what you need to do is make sure the company vehicle is the best vehicle, and we can advise on that. We can talk about it later. But then again, for self-employed, you need to be very wary of how you structure yourself in terms of expenses that you want to deduct. Your laptop that you have bought to be using, yes, it's allowable as an expenditure, but it'll be depreciated over the period of the laptop. Your telephone, your IT, your internet, all that expenses pertaining to business is going to be all deductible.
So basically, all business expenses which are pertaining to business are deductible. When you use that term deductible,
yes,
what do you mean by that, Uncle?
Say for instance, you had your income is say $100,000, and the expenditure that you incurred in terms of like telephone and other bits and pieces is $20,000. So against the $100,000 that you have earned, the $20,000 will be deductible. So your net income, which is $80,000, that's going to be a taxable income. So the $20,000 is deductible.
Okay, yeah. Perfect. So basically, in self-employed world, what is your compliance with IRD? Like an employed, we spoke about that. Your employer looks after everything, but now I've become self-employed. What do I need to know in terms of my tax returns? What is the period? When do I have to fill it? Do I have to fill it? If I delay, what happens? What are the GST periods? And also some basic knowledge on that.
So basic knowledge, your GST, depending on what cycle you're on. If you're on a 6 monthly cycle, then you have to file your GST return on a 6 monthly cycle. So 6 monthly would mean from April to September. That needs to be filed by the 28th of October. And from October to March needs to be filed by the 7th of May. So that cycle will continue. You'll have to file that. And then your income tax return needs to be filed by 7th of July if you're not linked to a tax agency. So you need to file your income tax return by that date. Now, when you file your first income tax return, that's when you are, in the first year, you're not paying any tax because you are, with a PAYE, you are paying as you're going along. But as if you become a self-employed for the first year, there'll be no tax for you in the first year, because after you determine what your net income is, the 80,000 that I said, you'll be taxed on the 80,000 and you have to pay that tax to the department following year on the 7th of February. And working from then on, you'll become a provisional taxpayer. Then you have to start paying your provisional tax moving from the following year, from August, depending on if you're 6 monthly cycle, then you have to pay in October and in May. But if you plan your business right, I normally say 1/3 of money that you earned is not your money. It belongs to the government in GST and your tax. So if you're earning $100,000, put $30,000 aside. When you put the $30,000 aside, when the time comes to pay the tax, you've already got the money. You're not looking for money. You haven't spent the $100,000 that you received or $80,000 that you received. So you have to form a habit when you start your business is to save as you go along. In that way, you have got a tax plan. 1/3 for the taxman, 1/3 for you, and 1/3 for run the business.
So 1/3 goes in your business, 1/3 for you, or 1/3. So basically, that's a very good fundamental as well, because a lot of people basically, when they earn in business, it's just not 1/3, it's 100% and 120% sometimes as well as mine. Then rest is sometimes tax in there. But if I want to just come back to, just rewinding back, returns and filing those returns, like GST, you said 6 monthly cycle.
Yeah.
Right. So I have worked 6 monthly, but I've also heard the term 2 monthly cycle.
You can have 2 monthly cycle, but for a self-employed contractor, I would say 6 monthly should be fine. You can do 2 monthly, you can do monthly if you wanted to.
If it's a higher volume, then
Exactly. So basically, 2 monthly is if you have got, say, if you're earning over $250,000, $350,000 in gross, so you probably need to do that 2 monthly, so your cash flow is all evened out. Otherwise, you have to have that rule in terms of 1/3, 1/3, 1/3, and you must do that, religiously do that, to be not caught when the time comes to pay the tax. Because if you don't do that, then in the end, when you come to pay the tax, you will not have the money.
And obviously, we've seen a lot of cases, a lot of people who get stuck because a lot of business money is used.
Yes.
And you use it to say it will come back, you invest somewhere, but then it doesn't come back, and then you file yourself short. You're like, oh my God, what should I do now? Then tax pooling and all things, which we'll discuss further, comes in.
Well, I'll just give you an example.
Yes.
I've got a client who has money in his tax savings account, and he just called me the other week saying that, Dinesh, I've got so much money in my tax savings account and I still want to use this money. You finish the accounts and I know what he's going to do. He said that I want to buy a car. I said, you can buy a car. So that money he has saved in taxes over the period is around $70,000 in over 2 years. So over 2 years, if he was to save, and if he did not religiously do what he did, he would not have been able to save that money. He would have been gone anywhere. So the example is, when you do that religiously, you may come better on the other side.
So self-employed or employed, if you save first and you plan your tax journey or your money saved well, you can then, earn to get. So if you, like your client, earned, saved money, even self-employed, did not use all the money and bought a Range Rover or another Porsche somewhere else, but he was planned well. 2 years later, then he bought what he deserved with his savings.
Yes.
That's very important for everyone to understand, that sometimes we overarch ourselves and extend ourselves to buy some things which we don't afford at that time, but we feel we're affording. But if you have that 1/3 policy, and that your 33,000 is your money which you have in the pocket, well, use it to your advantage and do whatever with it. But the rest 33 is for your business and 33 is for your tax plan. Perfect.
Yeah.
That's great, sir. Uncle, the next part is, for a self-employed person. Now we know that the tax cycle is 1st of April to 31st March.
Yes.
when are they due to file their first return? If I start the business this March, this April,
Yeah.
when am I due to pay my first return?
So if they are not with a tax agent, then they have to file by 7th of July.
Same year.
Same year.
And tax agent?
Tax agents, 31st of March the following year.
Following year.
Yeah.
So you get that much period with the tax agent that you can file your return type. So let's say if I started my business 1st of April 2024,
Yeah.
and I'm self-employed or I am like a sole trader, no tax agent, I have to file by July 2025, 7th of July, right?
Yes, yeah.
But if I have an accountant or a tax agent, I then file by 31st March 2026.
Yes.
Am I right in saying that?
Correct.
Okay, so you get time to understand, but GST is done 2 monthly,
Yes.
6 monthly.
That's all should be complied in terms of in timeline. If you're doing 2 monthly GST, so your April, May is in June, July is in August, September. So basically that way it's on the 28th of the following 2 months.
So what about PAY, Yank?
PAY is every month, 20th of the month you need to pay, but PAY depends. If you're doing your processing or paying your employee weekly, then you need to file with the department. Payday filing is what it's called. You need to file with the department. The employer needs to file with the department on the payday filing.
Okay, that's payday filing.
Yeah.
Okay.
The software is available that we help our clients who are employing employees. So we help them file these returns on a weekly.
Payroll software is perfect. That's amazing. And there are a lot of accounting software as well, which you help customers with and make it life easy.
We use predominantly we use Zero for our practices, and we also know MYOB and other accounting packages, but predominantly Zero.
Yeah, I think Zero has taken over MYOB now. I think in older days, MYOB was the best source. Now, in terms of some questions which I get from people, I'm going to make it self-employed, employed. It's a bit of a rapid fire. If I'm employed, if I want to buy a car, and I am an employee, can I claim anything?
No.
If I'm self-employed, and is it business related that I can buy a car according to my business, or I can buy anything, doesn't matter what business I do, and then claim everything back?
You can buy a car, but then again there were fringe benefit tax issues with regards to buying a car. So basically, private use adjustment will need to be made on the vehicle that you buy. So yes, you can.
You can.
Yeah.
But as an employee, you can't claim. So as an employment person, I can't claim anything. There's another question which has been looming in my head. And I asked John Key this question as well. That is our tax system fair? Because an employed person gets everything paid, upfront taxes paid, as to pay as you earn, and then you get something in your pocket to spend money on. Right. But as a self-employed person, you have all the expenses in the world, and then you pay tax. Is it a fair tax system?
See, with the self-employed person, if he has been in business for a longer period of time, what he does, he pays tax actually 4 times. He pays his first provisional tax in August, second one in January, and the third one in May. And if there is any tax outstanding, he pays it the next year, depending on his cycle, either in February or in April, his terminal tax, which is the tax that's due. So he's paying on a regular basis, but not monthly. He's paying in at least 4 installments over the year.
But expenses are basically deductible. Yes. A lot of expenses like cars, you said about FBT, expenses like entertainment expenses, we'll touch on in detail, right? What is claimable, what is not claimable. Then, petrol expenses, overseas travel, other sorts of expenses, taking clients out. Yes. As an employee, I can't claim them. No. But as a self-employed, I can. But if I have to boil it down to self-employed versus employed, do you think it's a fair system we work on? Because obviously, provisional tax comes in.
Well, self-employed fellow, just look at the self-employed fellow. What does he do in terms of how he does it? The employer looks after most of it. The employer gets all the deduction for vehicle, the entertainment, the fuel, and everything else. An employer has given the employee a car to use. An employee has got the privilege of being able to use the car. So he cannot be having a double dip in terms of getting from the employer is getting the same and he is getting the same. No. Yes, if he gets an entertainment card from the employer as an employee, then he can use that card to do whatever expenses and the company will reimburse him. And that can happen in an employment situation. On the other side, which is the self-employed, you are predominantly not allowed everything. So basically, if you went and to entertain your client, you will have 50% of that deduction. You're not allowed 100% because half is yours. and half is the other fellow. So basically, you're allowed on 50%. So that the record needs to be very, very clean.
So you should be self-employed, but employed by your own self. So you should be employee of your own company, and only you can get benefit. It's a very good, very good. It's a pro and con for every system. It's basically what suits your need,
Yes.
and what steps you want to take. Because provisional tax, which we'll detail into, what is provisional tax and why is it a norm? Why is it important?
Provisional tax is basically you paying taxes in advance because, like you said, the PAYFL is paying on a regular basis. Provisional tax is provisioned on your income that you might earn or will earn in future. You say earned last year, 31st March 2024 year, you earn $100,000. The IRD automatically does a 5% lift on your income, saying that you probably earn 5% more this year in your or pay 5% more tax in your income this year, and they will tell you that okay, on the 28th of August and the 15th of January and the 7th of May, you need to pay one third. So that you are paying provisional tax moving forward as you're going. So paying one third. So you're not paying the tax on the 80,000 that income you had. You'll be paying one third of the tax that you're allowed.
Perfect. And that's why provisional tax comes into picture.
Yes.
People,
And I'm sorry, provisional on your estimated income. That's why it's provisional.
How do you estimate the income?
The income is estimated based on your previous year's performance.
So if this year my performance is not going to go well, I still pay high provisional tax.
No. Then if you say your provisional for this year income is lower than what was previous year, and you can re-estimate your tax. You can go to the calculation tab in IRD. We can do a recalculation for you and say, okay, your taxes are going to be lower this year compared to last year.
Perfect. And obviously, when I get into these questions, I can ask you questions for the whole day. But what I want to get into is that, as a person who's been practicing, accountancy as a chartered accountant for years, right? What will be your 3 top advice to people who are, self-employed? How can they maintain, a good tax profile? Your 3 top tips.
For the self-employed?
Yes.
Well, basically, you have very little to do. Basically, you are compliant in terms of your employer being compliant. Therefore, you've got very little risk in honesty, and that basically where your buck stops with the employer. And there's no three prong to it, to be honest with you.
So you just have to. That's for employed. What about self-employed? What are the 3 top things for a self-employed person, a business, to follow to be compliant and well versed with the tax system?
Record keeping, right? And also compliant in terms of timely filing and all that.
Timely filing.
And
yeah.
like I say, you put the one third aside for your tax man.
So record keeping, filing our taxes on time, using the top accountants, and not being stingy there, and one third policy is a very important role. At global tax accountants, people would ask this question to you many times. What do you do differently than any other tax firm? And when we refer people, we know that why we refer. But for people as a general audience, this podcast will be aired to a lot of people. What is the biggest benefit of coming to global tax?
Timeliness.
If
information is required, we will put everything aside as a team and we will deliver. That's very important for us.
And that's important because when we started as well, the mantra is to look after customers, putting them at the forefront and making sure that you have a solutions-driven approach. And your biggest lesson, which you taught me again today, is that making sure you take your calls. If you can't, you go back in the evening and call everybody back.
Yeah.
Because probably the younger generation does falter in that line. There's an earthquake falter line somewhere. It only erupts when people get, oh my God, he's not answered my phone call. And you get it. And sometimes it gets physically impossible, and that's why you need a team. But your expertise is your expertise, and you making yourself available to answer questions, having the right team around you, makes global tax, one of the top accounting firms in New Zealand. And I would like to say, that it's an honor to deal with you in that way.
Well, we've been very lucky in that regard, and we have been very fortunate in terms of having a good team, and that basically drives our practice.
Well, that's amazing, Uncle, and thank you so much for coming along and sharing a lot of information. We will basically get the Dinesh Uncle back and asking all of the questions. If you have any questions which you want to ask him, please send us all the details on our below mentioned email. We also have his address details and his email address as well to reach out to him directly. His services as well on the window. Please contact their team if you want to get the best tax advice for you to be compliant and also to learn the basics so that you can get over top of your tax rather than asking for money. You should be right on top and learning from the best who has been in the game for years. Experience speaks volumes, and that's the best you can learn from. There's nothing else you need to sell on. Thank you, Uncle. Thank you.
Thank you much. Thank you.